Good morning, everybody. It is December 1st, 2025, the first day of December. That's why it's the first. Want to tell you about the Macro Dashes webinar on Wednesday night. You're not going to want to miss it because I have really some horrifying news. Not really. Maybe. I don't know. I think that the next financial crisis is right around the corner. I cannot figure out where $35 trillion is going to come from in the next 3 years, which is the amount of U.S. Treasury debt that we have to finance and refinance. So as I think it through, I know that the common wisdom is, well, they'll just print money and that'll be good for assets. Yeah, but inflation will be bad at the ground level. Some of the idiotic things being proposed with the tax code will make it worse for over 90% of people. And I think that some of the messages that are getting out there now are starting to wake up the executives, a lot of politicians in both parties. And I really think that next year could be a pretty rough year. As we look at the stock market right now, we know that it's been choppy for about a month, maybe 6 weeks. I think that is indicative of the international investors trimming out of the market into what is typically seasonal strength as labor conditions weaken. And there really isn't any new money coming at this point to bid asset prices up. And for us to get quantitative easing, there pretty much necessarily has to be a crisis first, or at least a really strong threat. With COVID, it was a clear and present danger, even if we overstated it. What's coming next will be a lot more like 2007 and 2008. And if you've rewatched The Big Short like I have recently, what really jumps out at you is that from the time the earliest investors who were betting against everything started making money in late 2007, it took until late 2008 for everything to crash. Long and variable legs. So I can't tell you exactly when things come down or how much. I can just tell you that it's getting dicey. We're on thin ice, and I don't see anything making that ice stronger in the short term. And I think almost everything is leading me to believe that we have another 2007, 2008 scenario coming. I thought maybe it wouldn't happen until 2028, but I don't know. The double dip recession still really jumps out in my mind, but a 2 to 3 year financial crisis absent of quantitative easing is what it looks like can happen. With quantitative easing, obviously we'll get a rebound faster, but it'll come with all the side effects of money printing, which is inflation and disruption in the economy and an awful lot of theft. So we want to position ourselves, as I've said over the last several weeks, to be very cash heavy going into next year. I haven't really accelerated my cash accumulation. It's pretty much on the same schedule of getting from 20 to 40 to 60% unencumbered cash, meaning it's not holding any cash secured puts by the third Friday of January. I have a couple more that will expire in the next 3 weeks if we don't get a significant drawdown here. So I am considering closing some of them and just taking the profits. I'll have more on that by this weekend. I want to see how this week goes. If we start to get at least a little bit of seasonal strength, a little bit of Santa Claus rally. But looking to next year, boy, oh boy, it looks rough. So you can get the investment webinar details here. I am changing the webinars back to the first Wednesday of each month. It'll only be the second Wednesday if the first is a Wednesday. If the second or if the first Wednesday is the second or third of the month, we can do that. But I generally need a day or two after the end of the month to get this ready. So we will be moving this back to the first Wednesday of the month. And if you are already registered at Zoom and you have your notifications turned on, when I change that in Zoom after this meeting, you should get a notification. You should get an email. If your notifications are turned off, then you won't get an email. That's a setting that you have to make. So as you saw over here, just go to resources, investment webinars, and YouTube. And at fundamental trends, you go to resources, and I actually have it pinned first. Okay. And I will change this back to first Wednesday. Oh, I guess I have a couple other things to fix here too. All right. Now, I have been reading Substack more. Substack is one of only 3 platforms that have been growing that I can find in the last year. Substack has been growing, X has been growing, and even Seeking Alpha has been growing. So I am on Substack. If you subscribe to Fundamental Trends or Margin of Safety Investing, you do not need my Substack. It's a skinny service offering just a couple stocks a month, no chat. But for those of you who are not paying for anything and you just want the core ideas, a little lighter approach, you could go to my Substack. I've been reading Substack because there's a lot of neat things on here, and I've been following about 30 people. I kind of read the scroll every day. And recently, I subscribed. I actually paid for this one. I pay for like 7 subscriptions, so you don't have to, because I will share the very best ideas. As I've mentioned before, there is sell side analysis and buy side analysis. Sell side analysis is the bottoms up, right? Where you do the actual primary research. Buy side is where you read other people's sell side research and then pick out the best ideas. I think it's the easiest way to understand it. So I subscribe to, I've subscribed to a lot of things since Labor Day after paring back. And I think I'm back up to about 40 paid subscriptions. So I do a lot of reading. Well, Michael Burry, one of the guys who bet on the financial crisis in 2006, 7, 8. Actually, he took his profits by the end of 2007 because the credit default swaps had started to pay off. And he was afraid that Goldman Sachs would go under and wouldn't be able to pay him. So he took his profits early. Had he held on and waited for the bailouts, he actually would have made more money, but he wasn't sure that was coming. So he took his, whatever it was, 465% gain in 2 years, and he went home. Michael Burry gets ripped on a lot because he has pointed out the excesses in the market, much like I have. And when you point out the excesses in the market, people automatically call you bearish and say that you're missing out. Well, it depends. Burry invested a lot of his money in water investments and a number of other things. And in fact, he roughly doubled his money in the past year after making a lot of money on water investments the last decade. My super concentrated portfolios have done extremely well because basically just own 6 things plus for a while Bitcoin, 6 stocks plus for a while Bitcoin. As the portfolios got more diversified, they did less well, which makes a lot of sense in a stock market where if you didn't own the Mag 7, you basically didn't make any money on large caps. And I really didn't own the Mag 7 because as I watched those charts go up, and certainly I should have rode the trend a bit there, a bit more than I did, it became apparent to me that the combination of circular finance in the AI space really reminded me of things that happened in 1999 and going into 2000. So on the one hand, we have $35 trillion of U.S. debt that has to be refinanced in the next couple of years, which is the major thing. But that's on top of the extend and pretend slow-moving commercial real estate crisis, which is on top of something that I found out the other night, that even in Wisconsin, we have a growing number of foreclosures on residential properties, which I didn't really know that. I wasn't aware of that. I was talking to a banker, guy I play poker with, and I just made a comment, and he said, "Do you think that we're about to get a crash?" And I said, "Well, hard to time it, but things don't look good." And he said, "Well, I handle all the foreclosures and subprime mortgages at my bank, a bank that I didn't think had that sort of job because it started out as a bank that was opened by a family that owns a really big company, like you would know who they are." And he said the foreclosures are going up for them. A highly vetted family office created bank. So that was kind of amazing to me. And when we take a look at all the chicanery, the tomfoolery, the shenanigans that are going on in executive compensation, basically executives just skimming these companies, you start to come up with a scenario where if the macro doesn't bail these guys out, the companies have big problems. Remember back when we invested in Palantir, I told you that when the stock-based compensation came down, that company would do really well. Well, they did. And then they just kept going up because there was a narrative chant that sold the stock to everybody. It's going up, it's going to keep going up. And lately, that's not been the case, but it took a long time. The stock probably went up an extra 100 to 200% more than it should have. Michael Burry got ripped on because he shorted it recently. Probably made money on the trade. Not much because he closed his hedge fund and he just has his personal positions now. He opened a Substack, $395 a year. And I believe he got 100,000 subscribers. Do the math on that. That, my friend, is a good week. Right? That's a good week. So I'm just taking a look around and I'm trying to figure out what the hell is going on with money in this country. Yeah, I'm really trying to figure that out because it is clear to me that about 10% of the people, and we know that 10% of the people do 60% of all the spending, that's a real statistic, are so far ahead of everybody else that can't be great for the broad-based economy. And yet, my income has basically doubled in the last 2 years, and I barely even try to get new subscribers. I don't write anywhere near as much as Seeking Alpha would like me to. They want me to write 3 times a week. So I'm going to start, see what happens. But I wonder, what message should I be giving people? And I'm going to ask you for a little help on that. Everybody wants to hear about the next stock to buy, the next investment to make. And I think my main message until this next big correction comes is that you should primarily be focused on defense. If you have large embedded gains that are in taxable accounts, I think you should figure out how to take some of those profits in January. Defer things to a new tax year. Unless you want to pay the taxes this year or for this year on this year's tax return, then sell something in December. But I really think selling a lot of cash secured puts is off the table in the short term. And I think what you'd rather do is sell a lot of covered calls on a lot of your taxable positions. Probably January covered calls, maybe February. You can spread them out probably. And I think it makes sense to take at least 20% off the table in most cases, 20% being the tax rate, and more probably in increments of 20%, depending on how conservative you are or how risk averse you are, depending on how big those gains are, depending on if you're close to dying and want to just hold on to something for the step up in basis and down the road. Most of you are under 80, so I don't know that that's a big consideration, but some of you manage money for parents. You got to figure that out. Recently talked to somebody whose family has a very long-term position in a big pharmaceutical stock. They're not going to sell it. If it fluctuates 20% in price, who cares? The embedded gains are so big that they absolutely want to wait for the step up in basis. But if you bought something 3, 4, 5 years ago and it's up triple or quadruple, you might want to take a whole bunch of that off the table. Just pay the capital gain. Back to Michael Burry. I'm going to share with you some of the things that he talks about. I have to figure out what he's cool with me sharing and not sharing. But one of his topics is stock-based compensation, which I thought was interesting. He's getting at a lot of the points that I've talked about, that a lot of the share prices are not reflective of true value in the market, and that these high stock prices are being used by the executives to enrich themselves. And at some point that comes down. It always does. My anticipation is that it's sooner than later, but it could be in increments over the next few years. Hard to know. Now, where you can avoid that is in your pivot stocks, right? Your stocks that are already beaten down. They have a large margin of safety because there's not much more to go down. So you can buy things near their bottoms and then just wait. And as Charlie Munger reminds us and reminded us often, money is made in the waiting. At the larger companies, as they approach the S&P 500 or are in the S&P 500, maybe your top 1,000 stocks, give or take, you really have to take a look at stock-based compensation and try to figure out, are the executives taking a disproportionate amount out of the company from profits? And in many cases, just the capital that they raise in the markets through debt and equity, through dilution. I have read reports on about 200 companies this year, and I will tell you it is roughly half where the executives are grotesquely overpaid. Not a little overpaid, but I mean by triple or quadruple or quintuple. That's why our executives make 6 times what executives in the rest of the world make. Folks, I'm going to give you a hint on that one. Our executives are not 6 times better than German executives or British executives or French executives or Japanese executives or Korean executives. They're just not. Maybe we have 20 or 30 of the best in the world, but as a class, we do not have thousands and thousands of executives who are worth multiples of executives in the rest of the world. I think that we'd probably be in good shape if we fired a lot of our executives. Of course, they've insulated themselves by putting their buddies on boards. If we fired them and hired a bunch of Koreans, Japanese, and Europeans, I think I believe that. So a lot of things going on the macro side, the chicanery side. One of the comments I made on X recently was, you can be a capitalist without being a crony. It's just that the cronies seem to be in charge right now. And just like politics may have empowered certain fringe groups, racists, neo-Nazis, whatever, I think the political atmosphere has also empowered cronyism and skimming from the system. And people will say, well, it's just market forces. No, it's not. If you break the system, it's no longer market forces. It's cheating. A lot of that going on. That's why I'm very bearish on the large caps. Quick reminder, if you haven't used Teresa's link, which she will put up in the chat here one more time momentarily, go get your discount for TradingView, because this is the best deal that they do every single year, and they only do it for about a week. Well, Teresa, if you can pop that up there for anybody who doesn't have TradingView. TradingView is one of the tools that I think you absolutely should have, because the screening function is spectacular. I set it up like this. Technical ratings, see the 1W, that means it's weekly. Moving average, oscillator. The moving average is what a lot of the traders follow. What do you see? Awful lot of things turning red. I like to watch the oscillator because that's rate of change, changes within changes. It's fractal, and it gives you kind of a head start. The red, green pattern in a market that's not plunging is usually a good pattern to pay attention to, because it tells you that something is probably getting ready to turn around. Pull up my watch list, pull up the dividend stocks. 79 dividend stocks that I pay close attention to. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 with buy ratings on the oscillator. 68 without. What does that tell you? That's a weak underlying market. Concentrics is one of the ones that I pointed out recently, and they're showing some relative strength, and it still hasn't gone up. The oscillator right here turned up, and on our Lux Algo oscillator monitor, see the little dot? That's the pay attention dot. We haven't gotten a buy signal. The arrows are typically buy signals, but we have gotten a pay attention. So a couple pay attentions followed by a buy signal. So concentrics, could they go down a little bit more? I guess they always can, but this is a pretty good level. If it fell down one more time, that probably would be it. That would probably trigger another buy signal. As you can see, it already has the Wyckoff buy signal. So it wouldn't be a horrible idea to sell cash secured puts on this one if you think you got a few months or a few quarters before the proverbial poo-poo hits the fan. Anyway, I really like using these, the growth stocks. Got a few that are saying buy. This is Arrow Group Holdings. As long as they are on the up and up, which I think they are, although some people have questioned that, it's probably a buy right now. Enphase was covered by Teresa this week in her trade journal. That's basically in a bottoming process. And again, you can wait until the trend turns up before you buy. That's not a horrible idea. You might miss just a little bit of the upside, but the trade-off is you're waiting until it's done going down. Right now, we're not sure. It looks like a good sideways trade that will break up. And the nature of some of these moves is so fast to the upside once they start that you hate to miss it. That's why I sell so many cash secured puts. At least then I get a piece. The upside on Enphase is pretty spectacular. This region right in here is probably where it gets back to. And then the question is, does it break out further? If I'm right about solar becoming the dominant form of energy in the next decade, in the 2030s, that Enphase has a very, very long ramp with very big upside. Another one that we like is Rocket Lab. I haven't really done much with this other than sell a couple of cash secured puts. You know that we sold it in here. I think it can get down to around 30. So I'm not being super aggressive. Again, with the weak market, don't really want to be. But in a weak market, especially a market where the large caps are selling and that money has to find a new home, this is an important point. Pay attention here. In a market where the large caps, especially the mega caps, sell off, that is a lot of money that has to get reinvested somewhere. Typically, historically, if we're not having a recession, we're not having a financial crisis, that money will find its way in the small and mid caps. Now, the question is do we have to get through a recession or a financial crisis first? Hard to know. But so many of the small and mid caps are so beat up and so cheap right now, it just becomes a matter of waiting. Waiting is okay. Something for the more faint of heart. You want a big fat dividend with the upside of AI potentially curing a disease or something. Pfizer. I think Pfizer is one of the absolute easiest stocks in the stock market to own. Can it go down a few bucks? Absolutely. But you're making, what it was the dividend now, about 6% from these prices. Quite a bit of upside. Pretty easy for this one to double, I think. And if they have an AI moment or that GLP-1 company that they just bought, actually it's a GLP-1 alternative company they just bought, could they do what Eli Lilly did and just rock it up? I think so. I think Pfizer is very safe. I think they pay an income. And I think that at worst, they do all right. But you have the potential for an asymmetric gain. You don't know which ones are going to happen, which is why you have to own a basket of stocks that could have asymmetric gains. And then you just need a few of them to do really well. As Peter Lynch taught us, a few big gains carry the day. It only takes a few big winners to really do well over the course of a decade. Pfizer could be one of them, and I think it's one of the lower risk ones. I would not really be selling cash secured puts on this because they pay such a big dividend. Just buy the stock. If you were going to sell a cash secured put, you would want it to expire just before a dividend X date. That way, if it gets assigned to you, you have the stock, and then you get the dividend too. But I'm not really selling cash secured puts on this one. I just buy it in new accounts. We're going to finish today on Bitcoin because somebody asked me about it. Keep this call short going into the Wednesday call. When Bitcoin was up here, I was telling you it's going to come down probably into the 70s. This is where I sold it at the start of the year. And then right over here, About a month ago now, I told you that I actually sold about 35% of my cold storage Bitcoin. So I had 11 and a fraction Bitcoins and I sold 4 and a fraction. Pretty well timed. My intention when I feel like expanding my Bitcoin holdings again is I will buy IBIT, which is the iShares Bitcoin ETF, because I'm not sure if I want a whole bunch of Bitcoin in cold storage anymore. I think that the future of Bitcoin is more uncertain today than it's ever been. I think the idea of it adapting as a medium of exchange is deteriorating. I think that the treasury companies have been bad for it. You take a look at MicroStrategy right now, it's getting crushed. Strategy Corp. It's going to be MicroStrategy again. You know why? Because they just keep going down. They keep shrinking. It'll be micro again soon. Down was 75%, down 58% over 1 year. Yeah. Everybody loved that one. Not me. I always thought that Michael Saylor was dog shit. So where do we buy Bitcoin? Well, Bitcoin in the 70 something thousands would correspond to these prices on Bitcoin or on IBIT. Here's the thing. If we get a liquidity driven financial crisis, a shortage of liquidity, this can absolutely round trip all the way to the IPO price and below. It can absolutely get down in here. So Bitcoin is not something I'm going to bet on a turnaround with. Bitcoin is one that I will absolutely wait for a bottom and a new uptrend to start. I am not going to try to pick the bottom on Bitcoin because ultimately, if there's a mass sell-off, it has a long way that it can go down. I don't want any part of that. And I don't think you should either. You understand that? When you can value a company and say, hey, if this company went out of business today, I'd get $20 a share and it's trading for $20 a share, right? That's probably an all right buy. But what happens if Bitcoin just keeps going down? Why can't it go down to 10,000 or 20,000? Michael Saylor doesn't have the money to buy it. Why hasn't he bought lately? And if 90% of the population is barely, surviving, and I guess that's a little over the top to say it that way. But if only 10% of the population is really getting ahead, who's going to buy the Bitcoin? And if unemployment ticks up, which it certainly looks like is happening, then what happens next? Then people sell investments because they have to live on that. So Bitcoin has a long way that it can go down. I'm not buying it in either one of these buy zones here unless there's new liquidity that creates an uptrend. I think that the bottom demand zone that you see here will probably get broken. I'm not sure where the monthly demand zone is. What Teresa would have to do is use a Bitcoin chart and show that because IBIT doesn't have that data yet, but Bitcoin does. Teresa, are you still on? Yeah. Can you put the TradingView link into the chat for people real quick? And I am going to pull up a Bitcoin chart. So Bitcoin, right? This is the weekly chart. Let's change it to monthly, right? It's not oversold yet. And while it has a pay attention dot, if liquidity falls off a cliff, look at what the price got down to the last time it was in one of these sold off channels. What was the price here? Right? It was under 20,000. Now, I think that this level right here, see those orange lines? I think that a price in the 30s is probably as bad as it can get, presuming they don't make it illegal. Hey, Teresa, I meant the chat here for the Zoom, not the chat room. Ah, wahaha. So I think that 30 something right in here is definitely an area. Let me see if I can create where's my rectangle? Rectangle. Let's do an ellipse. Ellipses are fun. Right here. Probably right there. That. I think that's probably, I have it all the way down to here. There we go. That line, that line, that line. Yep, right here. Bitcoin could definitely get all the way down here. Take a look at what it did here. Retraced about 2/3, retraced about 2/3. Why can't it retrace about 2/3 again? A 618 or 68, well, 618 retrace. Should we put some Fibonacci lines in? They seem to work. All right. Whoops, wrong one. Wrong one. There we go. So from top to bottom to top, 1.618. Why can't it get down here? Be really careful with Bitcoin. That's my point. All right. The link to the Black Friday special on TradingView is in the Zoom chat right now. It'll also be below this video when I post it on YouTube, and I will get that done this afternoon so that it's up there, but it's also in the chat rooms. If you aren't using TradingView, I think you're making a mistake. I think the screening is something that you can use every week. You don't need to do much of your own charting. Like I said, I don't draw much on my charts anymore. I use all the algorithms. You can see the ones that I'm using on the left-hand side and on the bottom. I buy the Lux Algo separately. You don't have to. You can use the BASS, which is close, right? There's other things that are close, and I'll show you this so you don't have to spend more money. But I think the TradingView, the reason that you buy it is so that you can play with the charts a little bit, but the screening is that good. If you set it up with weekly indicators, and every now and then you change it to monthly just to see the big picture, but you can see the monthly pretty easily with SPY. You know what the broad picture is by looking at SPY, right? I have it on monthly. Look at how overbought the stock market is on the monthly time frame. Then look at this. Clear sell signals. Large caps are tough, folks. Large caps are tough. As far as the plan that you need, I have premium. I think most of you just need plus. Essential's not enough. Ultimate is like if you were going to day trade. So it's either plus or premium. I use premium. Again, I don't remember why I bumped it up to premium. There was like something I wanted to use. I think some of the indicators are available here. So start with plus, see if it does what you need. And if you need to bump it up to premium, go ahead. It's not much different. Actually, premium right now is the same price. So I don't see why you wouldn't buy premium, at least short term, for your first year. All right, everybody, have a good day. I will see you Wednesday night. And just think about how much risk you want to take. And because it never makes sense to go 100% cash, what are you going to own that's dirt cheap that should hold up through a down market and then come out screaming when they print money? Because all roads lead to QE. That is the name of an article that I have coming out. All roads lead to QE. Absolutely going to happen. It's just how bad do things get first? Somebody asked about New Fortress Energy. I did not sell any. I'm telling you, I think I'm right. That doesn't mean you can't, if you just don't want to be in it, that's fine. But I think they're going to cut a deal on the debt. The stock is already pricing it in. I don't think there's much downside, even if they dilute 50%. I don't think it matters. In fact, if they only dilute 50%, the stock's already down 95%. That would be positive. So unless they, put out 10 times more shares than already exist, I just don't see that happening. And I think they're going to use warrants. I don't even know that they're going to issue too many shares. They're going to use warrants, which means that as things get better for the company, they'll have another source of capital. All right, folks, have a fantastic couple of days. I got some things coming for you. Next week, I will be in Las Vegas. The only day I really have available will be Friday morning. So if you happen to be in Vegas next Friday in the morning, we could get together for an hour. All right, everybody, have a fantastic day. And if you want to play in my poker league, direct message me and I will give you the information. My online poker league. All right, take care.